Today is the 15th of October 2020. My name is David Hickson, and in this market update we're going to be taking a look at an analysis in the S&P 500. I've been tracking the analyses in the S&P 500 for some time now. I think it's over a year, so if you haven't seen previous market updates, I would encourage you to take a look at our playlist of these updates on YouTube, where you can catch up with some of the previous updates that I've made, because a Hurst cycles analysis builds often on the analysis that we've been tracking over time, and that's what I'm trying to explore and explain in these market updates. I hope that you're finding them useful. Hit the like button is apparently the thing that you're meant to say. Well, certainly let me know if you're finding the updates useful. I should mention that although these are Hurst cycles market updates, a lot of what I speak about is developed upon what Hurst originally discovered in the 1960s and 1970s. So it's not pure Hurst, some of the things that I speak about, but it is all based on the discovery that he made 50 years ago about how financial markets are influenced by cycles. The title of this market update is The Second Peak, and that is because I believe that we are currently seeing the second peak of the 40-week cycle forming in this market. So before we take a look at that second peak, I must ask you to please make sure that you have read and understood these disclaimers. So here is the default analysis in the S&P 500. I've often mentioned in these videos that I always keep a chart in Sentient Trader which has the default analysis. I don't influence the analysis at all. This chart is working with the default nominal model that Hurst defined way back in 1970 when he published his cycles course. And you can see I haven't pinned any of the troughs or influenced the analysis in any way. And the reason I do that is because over the years I have discovered that whereas Sentient Trader is a very powerful tool in the hands of an analyst, very often left to its own devices, it comes up with a better analysis than an experienced analyst will be able to produce, which is why I always make sure that I have a default chart. So this is the default chart, and of course the important points to notice are that Sentient Trader has positioned the 20-week cycle trough below this low price over here. In the third week of September, we have an 80-day cycle trough over here, and we have a long, and this is in fact, I think it's a 9-year cycle trough over here on the 23rd of March. Now you will probably know if you've watched previous market updates that these very long cycle troughs, I don't worry too much about the exact magnitude of the trough. Is it really a 9-year cycle trough? I don't know, and honestly I can't answer that question yet. It doesn't it's not something I'm terribly worried about at the moment. I think that it is at least an 18-month cycle trough at the very least, and I think that it is probably a 54-month cycle trough. It might well also be a 9-year cycle trough, but I don't worry too much about the exact magnitude. The important thing is that it is at least an 18-month cycle trough, possibly 54-month, and therefore it's a fairly big cycle trough that is formed, which means that cycles all the way from 18 months, possibly 54 months, maybe even 9 years, are causing the market to move up, because those cycles have all turned up. That's the definition of a trough, of course. It's a low point, and following the trough, the cycle is influencing the market to move up. And so we have quite a lot of bullish pressure because of those cycles, and that is why we have seen this big move up in the market since that time. Let's just go back to the previous market update that I posted. So I posted that market update on the 23rd of September. And I would encourage you to go back and look at it if you haven't seen that market update, because it's going to provide a lot of background that I'm not going to go into in the course of this video. And so the reason I posted that market update was because on the Monday of that week, price had touched this 20-week FLD. So this green line is an FLD. FLD is an acronym for future line of demarcation. It's a very simple line. It is the median price displaced to the right, in other words, into the future, by half the current wavelength of the cycle upon which the FLD is based. So the price touched that 20-week FLD. You will notice on this chart there is a tiny gap there, and the reason for that is because this FLD has shifted just slightly. Its position has shifted by just a few bars, and so in fact price, when we look at it now, didn't quite touch that FLD. This is something that often disconcerts people when they're new to working with Hurst cycles. And it is because the FLDs I've just mentioned is based upon the current wavelength. The current wavelength is something that we estimate. I could say calculate, but more correct, more accurate really would be to say that we are estimating the current wavelength on the basis of the analysis which you see at the foot of the chart. Because of one of the principles that Hurst defined, which is the principle of variation, we know that all of these cycles have wavelengths that are constantly varying. Every single iteration or wave of a particular cycle will have a slightly different wavelength. They will all achieve a certain average when averaged over time, and in fact the averages that I work with now are the same averages that Hurst discovered 50 years ago. That is how constant these cycles are, but they are also varying all the time. And what has happened in this analysis is that a new trough of the 20-week cycle has been found in the analysis. Here it is marked with these diamonds at the foot of the chart. And because a new trough of the 20-week cycle has been found on this particular chart, we are able to calculate a little more accurately what the current wavelength of that 20-week cycle is. And the calculation of that wavelength is ever so slightly different to the estimate that we were making on the 23rd of September when I recorded my previous market update video. And because of that slight difference, the FLD is displaced slightly differently on the chart, and therefore price didn't quite touch it on the Monday. Well, that was a fairly long explanation. The point is that the reason I recorded the video on the 23rd of September is that I was expecting the 20-week FLD to provide support for the market at this point. I'm going to draw over the FLD so you can see. I suggested that the market was going to find support at the level of the FLD because we were expecting a trough of either 20-week or 80-day magnitude. You can go back and look at that video to understand why it would have been one or other of those two cycle troughs that we were expecting to form. The point is, I was expecting the FLD to provide support. Ironically, and I had to laugh at this, about an hour after I published that video, price dropped fairly sharply. You can see this big red bar over here. Price dropped, came down, and then early the next morning turned back up again. And it did in fact find support, as you can see, at the level of the FLD. It's what I call approximate support. FLDs will often provide approximate support or resistance, by which I mean that price won't absolutely accurately hit the FLD and then reverse. Sometimes it does, but more often it'll go just a little bit beyond the FLD and then bounce back again. Which is why FLD lines are very important lines to watch, because when price hits the FLD, that's like an early alarm. It's an early warning that you need to pay attention, because you're going to want to watch to see how price reacts to that FLD, because price does often react to an FLD. Okay, so the 20-week cycle trough, according to this analysis, then formed on the 24th of September, and price has been going up. So what are we expecting now? Well, while we're on this zoom scale, let's have a look at this 20-day FLD. And following a trough of at least 80-day magnitude, in this case a 20-week cycle fits that bill. We expect price to cross above the level of the 20-day FLD. It's the same line, but it's based on the 20-day cycle. And we expect it to reach up to a target which is generated as a result of price crossing that FLD. And I spoke about that in our previous market update video, so I won't go into too much detail now. But we expect it to achieve that target in order to fulfill what we call an A category interaction. And in this case, the target generated by price crossing that 20-day FLD was at this level over here. I think it was at about 35.15. So as you can see, price achieved that target. It did so on Monday of this week, and it went just a little bit beyond the target, and it has now turned down. And so that interaction with the FLD is considered fulfilled. That's the A category interaction. And now, according to this analysis, you can see that we are expecting a 20-day cycle trough over here. We're expecting that 20-day cycle trough to occur round about now, which means that we would expect price to come down to the 20-day FLD and find support at the level of that 20-day FLD in what we call a B category interaction. It's very simple, A, then B. And from the B category interaction, it would then head up again. So that is one scenario, one situation that we could expect, that price will come down to the 20-day FLD, find support, and then go back up again. But in my previous market update video, I showed that it is possible that the trough that we were looking at forming at that time was not 20-week magnitude, but 80-day magnitude. So let's take a look at that chart and see whether that analysis is still viable. Here it is, and you can see that as opposed to the default analysis where I didn't influence the analysis at all, here I have influenced the analysis, and I have pinned a 20-week cycle trough over here at the end of July. So the result of having done that is that the analysis has now identified an 80-day cycle trough over here in the third week of September. This was one of the analysis possibilities that I pointed out in my previous market update video, so it's not really a big surprise. So in terms of what we're expecting next, we need to consider what the differences are between these two analyses. Let's start with this one because we're looking at this chart at the moment. The first thing to say about this analysis is that it makes the assumption that the cycles are currently running short. And I discussed this, I think it might have been 2 market updates back, the possibility that these cycles were running short. It might have been further back, but it's certainly a possibility that many Hurst analysts are considering very likely that these cycles are running short at the moment. Here you can see the 20-week cycle is running at 129 days. The average length of a 20-week cycle is 136 days. If you don't understand that, then please make sure you download our free 10 core concepts of Hurst cycles, which I'll put in the description below this video. So that's running only slightly short, about a week short, 129 days as opposed to 136. But you can see that the 80-day cycle has been running short as well, 56 days instead of 68 days. It's not a very big variation, a 12-day difference in an 80-day cycle. It's not very big, but nevertheless, it implies that these cycles are running short. And it's certainly a very viable possibility. One of the problems that I have with this analysis is that the 20-week cycle trough, which should really be a pretty prominent trough on the chart, is this very subtle dip down that happened over here at the end of July. It's not perfect. It's not actually my preferred analysis. I don't think I tend towards the default analysis, but it's very important to bear in mind that this is a possible analysis. So what are the implications of this analysis? Well, the first and most obvious implication is that the 40-week cycle trough, you can see the nest of lows over here, very nice neat nest of lows, which increases the chances, in my opinion, of this analysis being the correct one. It implies that the 40-week cycle trough should be expected in the final week of November. You can see where I've drawn that arrow over there. So that's going to be very interesting because, of course, the US elections occur in the first week of November, right over here, and sort of 3 weeks later we're expecting the 40-week cycle trough to form according to this analysis. So why have I called this video the second peak? Well, what we expect out of these cycles is for a cycle, any cycle, to form an M shape in the markets, and I'm going to show you the M shape here. It's not a very clean or well structured M shape. As you can see, it's a very sort of a twisted M shape, and there it is there. Now, why is it so twisted? It's so twisted because of all these cycles here that are pushing up. The more cycles you have pushing up, the more twisted the cycle gets to the upside. And in fact, I shouldn't have drawn quite such a strong move down, because if this is the case, it's unlikely that the market is likely to move quite so far down. I have had people take screen grabs of these videos where I've sort of accidentally drawn lines on my chart that take price below zero. You shouldn't take these lines too much to heart. So nevertheless, the point is that the second peak of the 40-week cycle is forming, and so in my opinion, certainly according to this analysis, we are in the process of moving down to this 40-week cycle trough. Let's zoom in and take a look at the same sort of thing that we were looking at a moment ago with the 20-day cycle FLD. Just a quick comment, here's the 20-week cycle FLD. You can see it's in a slightly different position on this chart, and here you can see it was in fact touched on that Monday that I spoke about a few minutes ago. And so why is it in a different position? It's in a different position because of the different estimate of the current wavelength of the 20-week cycle. I really hope that's clear. We often get emails from people saying, how can I plot the FLD on my chart? It's really easy. It's the simplest line possible. It's your median price displaced into the future. The problem is, in order to displace it correctly, you need to know the current wavelength of the cycle, which means you need to perform an analysis. Okay, so let's have a look at this 20-day FLD. What's happening here? Well, here is our trough of the 80-day cycle, and so the first thing that we would expect following a trough of the 20-day cycle is for price to cross up above the 20-day FLD, which it did over here. It fulfilled its projection, which it is expected to do before it comes back down to the 20-day FLD. Now here is the next nest of lows. In other words, this is when we were expecting the first 20-day cycle trough to form after this 80-day cycle trough here in the third week of September. Why is it in a different position? Because of course we have a different analysis. And if we measure the bars there, I think you can see that that 20-day cycle trough was expected about 15 days after that. And so when price dipped down over here 13 days after that trough in the third week of September, that for this analysis really looks like a very good possibility for the 20-day cycle trough to have formed in the market. Why is that important? It's important because at around about the time of the 20-day cycle trough, we expect price to find support at the level of the 20-day FLD. I just mentioned in the other analysis that we are still expecting that 20-day cycle trough to form, and therefore we are expecting the 20-day FLD to provide support. That is the crucial difference between these two analyses. According to this analysis, it is likely that our A category interaction happened here. It fulfilled its target over there, came down, and then found approximate support at the level of the 20-day FLD as the 20-day cycle trough formed over here in the first week of October. Sentient Trader has not positioned diamonds there yet, and there are complicated reasons why it hasn't done that. I don't have time to explain that now. But the important thing is that the next thing we're expecting according to this analysis is for price to drop down into this 40-day cycle trough, which we are expecting pretty much early next week. No, not next week, I beg your pardon, in about 2 weeks, so in about 10 days time. That's when we're expecting the 40-day cycle trough to form. So what should happen on the way to that 40-day cycle trough? We would expect price to cross down below this 20-day FLD, generate a target to the downside for that 40-day cycle trough to form. And that is the crucial difference between these two analyses in terms of what we're expecting over the next few days. So what do you do? How do you trade this? Well, there are two options. The one option is you can choose one of these analyses and trade on the basis of that with confidence in your analysis. The other option is to wait until price touches the FLD and watch it very carefully to see how it reacts to the FLD. People are sometimes surprised to hear me saying how price reacts to the FLD. What I mean is, when price touches that FLD, what does it do? Is it going to bounce up again, which would indicate that the other analysis is probably the one in play, and therefore this is a B category interaction that is forming? Or does it slice straight through below it, and it's going to, in that case, probably head down to form the 40-day cycle trough, and this analysis will then become the preferred analysis of these two. So I really hope that makes sense. I hope it's going to provide you with some useful information that you can use over the coming days. We need to be watching this 20-day FLD very carefully to see what price does when it touches the FLD. Remember, the important moment is not the moment it touches the FLD. Make sure you're following us on Twitter, because when price touches that FLD, it will send out a tweet and it will announce the fact that the price has touched the FLD. That's not the important moment. That's a warning call to say, okay, take notice, now let's see what price does at this point. Let me end this video by showing you, we'll just go back to let's clear those FLDs, and let me show you what the big difference is by taking a quick look at the composite model line. I don't have time to explain this line in this video. I've done it in pretty much every video I've recorded recently. It gives us an idea of what the analysis is telling us to expect. And here you can see, according to this analysis, the second week of the 40-week, the second peak of the 40-week cycle is formed, and price is now heading down into the 40-week cycle, which is expected in the third week of November. That's the bigger picture according to that analysis, and we'll go back to our default analysis and do the same thing on this analysis, display the composite model line and compare the difference. So here is the big difference with this analysis. Because these cycles are running longer, we have a very straggly and messy nest of lows in the future for the 40-week cycle trough, indicating that we are only expecting that trough to form in about February or March of next year. And other moments to look out for are this 80-day cycle trough, which is expected to form in about the middle of December. And here is the 40-day cycle trough, which is expected to form around about the time of the US elections in the first week of November. The composite model line shows that price, according to this analysis, is still expected to travel further up and form that second peak of the 40-week cycle before coming down again and only forming the trough of the 40-week cycle early next year, probably. So those are the two possibilities that are open at the moment. We need to keep our eyes on that 20-day cycle FLD, and as we see how price reacts to that FLD, we will begin to be able to eliminate one of these possibilities, or certainly identify the preferable possibility. I do hope that you found this video interesting. If you have any questions, please put them in the comments below this video. I look forward to hearing from you. And thank you for taking the time to watch the video and for your interest in Hurst cycles.